So from the darkness, yeah, having some technical difficulties, so we just gonna have to work with the bad lighting for the day.
Absolutely. Welcome to the Real Life Podcast. I don't know what I was about to say at first.
I don't either.
I got to take these classes off. Welcome to the Real Life Podcast, where we talk all things real estate and life insurance. I am Shanita Johnson, licensed real estate broker practicing in the great state of Tennessee and Mississippi, specifically the Memphis Metro. And this is my co host and my eldest daughter.
Hey y'all, my name is Ariane Johnson. I'm a licensed life and health producer based in the state of Maryland, but also serving the state of Tennessee and New Jersey. And I also help with retirement planning. But yeah,
Things real estate today?
at first, yeah.
Well, one thing real estate, not all things real estate. We're going to talk about one thing real estate.
What's that one thing today?
The one thing real estate we're going to talk about today is something that I get asked a lot about, especially from people who this is their first time purchasing a home, or people who make a certain amount of money, and that's the down payment. So we're going to talk about down payment assistance, down payment grants, down payment loans. What is down payment? What is the down payment assistance? So,
Tell me, tell us, educate.
okay, to make it plain, down payment assistance can come in two forms. Down payment assistance can come in the form of a grant, which we all know a grant does not have to be repaid, and it can come in the form of a loan. Now, if it's in a loan, it can come in two ways: forgivable or repayable.
We like forgivable.
Okay, so the forgivable loan simply means the forgivable loan simply means you stay in the home for a certain number of years. If you stay in the, as long as you don't move or sell the home within that time frame, 30 years, then you never have to pay it back. Okay.
Gotcha.
Or the forgivable and so that's the I'm sorry, I said the forgivable. The forgivable, yeah, as long as you don't sell the house, you don't have to pay it back. So that's the forgivable.
Hmm.
Or it can come as a unforgivable loan. You have to pay it back as it'll be a second mortgage on your home. And you pay it back, a certain number of years after you've
Right.
been home. But it does not accrue interest, usually. It's just if you got $7,000 for down payment assistance and it's a second mortgage, then you just pay $7,000. There's no interest. But there are so many, when I say thousands of down payment assistance programs across the country, it's impossible.
Thousands?
Thousands,
Thousands.
literally. The last time I checked, there were over 4,000 down payment assistance programs across these United States. So down payment assistance is state specific. There are, I can think of in Tennessee, again, so down payment assistance is state specific, county specific, region specific. So of course, I serve the Memphis Metro, which is West Tennessee, right?
Best part,
And,
yeah.
and there are there are down payment assistance programs that are only for the counties surrounding Shelby County, which Memphis is in. There are programs that are specifically for DeSoto County, which is North Mississippi. So it's all specific to what it is. Now, that's the basics of down payment assistance. Now, what does down payment assistance cover? I'm glad you asked. Yeah.
You read my mind.
Down payment assistance covers your down payment on the purchase of a home. The amounts, again, can range from anywhere. I've seen down payment assistance from $2,500. The most I've ever seen is $35,000.
Oh wow.
So but that's just here in the areas that I service. I'm
Hmm.
sure there are other down payment assistance programs that are more than that, but you can get anywhere. But just because it is available does not mean that you necessarily qualify for it.
Right.
Just because you are a first time home buyer does not mean you automatically qualify for down payment assistance. Just like with just like with your to qualify for the mortgage, there are things you have to have in place in order to qualify for down payment assistance. One of them is you have to be a first time home buyer. What does it mean to be a first time home buyer? You cannot have owned real estate in the last 36 months. But on that 36 month and one day, you're a first time home buyer again.
36.
In one day, you are a first time home buyer again. So
It's on topic.
that's the basics of qualifying for down payment assistance. But there are income limits, there are credit score requirements, there are debt to income ratio requirements, all of those things. So down payment assistance is available, but you may not necessarily qualify for it. You have to do your research. Talk to your when you get ready to go through your lender to find out what loan program is best for you. When you're trying to find out how much house you can afford, that lender will let you know what programs you qualify for. Most lenders are aware of the down payment assistance programs that are available in their market. So,
Right.
what down payment assistance covers? Your down payment.
I would hope so with the name of like down payment assistance.
But some people think, though, that their down payment will cover their upfront costs, which we talked about before, which
Hmm.
is inspections and all that. No, down payment is specifically for your down payment. Now, well, let me back up a little bit because there is one program that I'm aware of that you can include realtor fees in your down payment. That's only one that I've ever seen. But the majority of them, it only covers down payment. It doesn't go towards anything
Oh, I have a question.
else. Okay.
You said realtor fees.
Okay.
Now, do I have to pay those realtor fees? Because I have also seen somebody say something about the seller covering the cost. Do
You
I have
said
to pay them or does the seller have to pay them?
so legally, the seller does not have to. Traditionally, that's a great question. Traditionally, sellers have paid both the listing agent's commission and the buyer's agent's commission. Traditionally, but it's not a rule. It is not a rule.
They don't have to.
It's not a law. No, it's not a law. So when you get your representation agreement signed, if you are a buyer, your representation agreement with your real estate agent, when you get that agreement, your real estate agent should go through that agreement with you line by line and explain to you how the commissions work because it is included in there. Because more, and I'm just speaking from where I'm licensed, Tennessee, Mississippi. The the I'm sorry, I got distracted. The there you can put in the agent will put in your contract in your agreement what their commission is in the event that the seller does not cover their fees. In the event that the seller does not cover their fees, their commission, then you as the buyer are responsible for that. But it has to be in your agreement with your real estate agent. So to answer your question plainly, it depends. Traditionally, again, traditionally, sellers have covered both agents' commissions. So,
Okay.
but it's not law, it's not required. And on the flip side, when an agent is working with a seller to sell their home, they make them aware that we have to make them aware that whatever our fee is, we can either agree or they can tell us how they want us to either split that or share that with the other agent. And the seller can say, I only want to pay you because you are my real estate agent. I don't want to pay the other agent. I haven't
Gotcha.
I haven't experienced that working with a seller, but it's
What,
possible.
you
I
haven't
have not,
experienced like the seller
yeah,
paying for both of them?
I have not experienced a seller saying that I am not going to cover both
Oh,
agents.
yeah,
I
because
have
I
not.
think when we bought our house, the seller paid our agents. We didn't have
Yes.
to.
So
It was
I've
included.
never experienced a seller saying that they're not gonna pay the other agent. I haven't experienced that. There may
It
be
would make
something to
sense because
it.
they'd be like, I got to get rid of this house.
So I don't know. But they don't, again, it is not a requirement.
So there's a
And
potential that you would have to pay it in addition. There's a chance that you would have to pay it in addition to your down payment.
yes, and the down payment, I've only seen one down payment assistance program where it allows for that down payment to cover the agent fees for the buyer. I've only seen one, but the majority of them, down payment only covers the down payment for the home. So,
So we're talking about down payment, and I'm
yep,
assuming and I'm not, I don't want to assume, but we pay that, once we do the mounds of paperwork when we finally found our home and all that stuff.
yes.
Is that the totality of the closing costs or cash to close that we need to get our home? Or is there something outside of the down payment that we also have to pay? Can you explain the cash to close and what that means?
Cash to close when we're talking about, we're looking at the down payment. So the cash to close that you need. Now your down payment, if once your lender tells you what type of loan, what type of down payment assistance program you qualify for, that once your loan is approved, then that down payment assistance is applied to your loan. So it reduces, right? It reduces your loan amount. The cash to close that you're talking about, the money that you have to bring to that is counted in your closing costs includes attorney's fees. It includes homeowners insurance because as a buyer, you're required to get 12 months of homeowners insurance on the property. So that has to be paid. Your closing costs include your lender fees and any other legal fees in there.
So it's not mixed. It's a separate cost, but it is in addition to.
The Yes,
Gotcha.
yes.
So you said there are down payment assistance programs that have helped with the lender's costs. Are there any that also give any extra assistance, or are there assistance programs that help with that cash to close cost? Or any
So, so,
grants out
so
there?
sometimes your down payment will cover all of that, but it won't cover your insurance, your homeowner's insurance. You still have to pay that because that's part of your prepaid cost. You still have to cover your appraisal for the property. Down payment is not going to cover that. You still have to pay property taxes on the property for whatever the deficit is. So if you're buying a house in November, the property taxes is going to be for the last few days of the year. You still have to pay that. And then your cost, your cash to close may also include if you have to pay off something. If you have to pay off, like for me, when we bought our house years ago in
Yeah, go.
2006, yeah, 2006, we bought our
When
house.
houses were $15.
It really wasn't, but I had a I had a Sprint bill. It was $187, and I had to pay that $187 in order for us to get this loan. So
Oh
that
wow.
that may be something like your lender may say that you need to pay this bill off. You may need to pay your credit cards down. So as we talked before, you have to have some money saved, set
That's a
aside.
reoccurring theme.
It is
Save some
because
money.
down payment assistance is not going to cover your debt. It goes toward the purchase price of that house. It's not If you have an old bill you need to take care of, down payment assistance is not going to cover it. But down payment assistance is a great thing.
Yeah.
And here's a misconception too, that down payment assistance is for a certain price point. That's not true, because there
Also,
are,
anybody can get down. Anybody, there's a potential for anybody to get down payment assistance.
depending on the purchase price of the home.
Okay.
So there is one program you can get up to, the purchase price of the home can be up to $400,000, and you can still qualify for down payment assistance.
So if we get into 600,000, 700,000, we probably not gonna get no down payment assistance.
Nah,
Um,
nah,
understood.
yeah.
Darn.
So don't,
Maybe
so
next
don't,
time.
I don't want people to think that down payment assistance is only if you're buying a house, $200,000 or less, because that's not true. There are so
Gotcha.
many
Well, that's
different
good to
programs.
know, though.
Yeah, there are so
Well,
many
I
programs.
I have another question about some of these additional fees and costs.
Okay.
I'll use personal experience.
Yeah.
I know what happened with us and how it works, but just in case others may not and they have similar issues. Say, for instance, you have your house and it's the house you want, you decided that you want it, you're not going to look anywhere else. However, though, the house has a couple of issues that need to be fixed, right? Some kind of maintenance. Like for us, we had a couple different things. There was a vent that needed to be fixed over our stove. There was a gas thing that needed to be fixed. Whatever it is, and there was something else I just can't remember off the top of my head. But those people still have to be compensated for coming in and fixing those things before we get into the house. Where do those fees go? Do those go to the seller? Do those fees come to me and I have to pay them in my cash to close? Are they a part of my down, like where does that money go? Or where do those bills go?
So if I'm understanding you correctly, you're saying that the lender says this thing needs to be fixed in order for us to get this loan, right?
Mm-hmm.
Okay. Let's just use the example of a broken window. Okay.
Okay.
There's a broken window, and the lender says we will not give you this money until this window is fixed. A couple things are going to happen. The agent is going to the the buyer's agent is going to tell the seller's agent, "Hey, we need this window fixed." The seller can say, "I'm not fixing it," or they can say, "I will fix it." If the seller says, "I will fix it," then they will pay to get it fixed, and it doesn't affect you at all as the buyer, because the seller is getting it fixed because they want to get this house sold. Because there are certain repairs, depending on your loan type, that have to be made in order for the bank to give you the loan, because they're not, certain loan types will not allow certain things to be damaged or in disrepair. They won't give you a loan for that. Okay.
Got it.
If the seller says that I'm not going to fix that.
Take it or leave it.
Yeah. And if the bank says, well, Mrs. Buyer, we can't give you the money to buy this home, can't do that. So either you can get it fixed or you can find another property. I had a situation like this. There was, excuse me, there was I was working with the seller. One of the upstairs windows was really small. And so in a, excuse me, every room has to have two ways to get out. Of course, a doorway and a window. Like it has to have two exits in case of a fire or whatever, safety reasons.
All right.
So buyer had a the buyer's mortgage company said, "Hey, we need this window to be replaced," and um, the seller said, I'm not doing that.
Those are expensive, so I'm not
Yeah, I'm not."
surprised.
They said, "I'm not going to do that." So the buyer decided, "Hey, we will cover the cost of this window." So they actually did the buyer actually did the repair to get the window done, and then they moved forward and purchased the property. Now it took longer
Yeah.
but the they bought the property that way because the seller was not going to do it.
And we were on the opposite end. The seller did cover the costs for our repairs.
Or another thing that could happen is if the lender allows it, the seller can say, "I'm not going to fix it, but I'll give you some money to fix it."
That also happened with us too,
Yes,
because it
that
was
so
something
that can
else.
happen. So you have all of those different ways, but down payment assistance does not cover that.
Oh, that's good to know in case people were expecting
Yeah,
something
down
like
payment is
that.
if there's something that needs to that's a lender required repair, down payment assistance doesn't cover that. So
Got it. So we've learned that down payment assistance will lower your overall cost of your loan.
yep,
Your cash to close, it's separate, but in addition to,
yep.
there are programs over at currently over 4,000 of them
Mhm.
apparently.
Yes. And I will and this is we will include the link so that you can find the down payment assistance programs in your area.
Yes, yes, yes,
Yeah,
yes. We put
we
that
will
in the
include that.
description. Go ahead and find that if you are ready to buy your house. Go do some research. Always
Yeah,
always do research regardless, but do some research. I guarantee you'll probably find something out there.
absolutely. But
Yeah.
this is a like sometimes when you Google search and you find stuff that's either outdated or just wrong. So the link that I'm going to provide, it is directly from the providers of the down payment assistance programs. So, and it's for every state in these United States.
That'll
So,
be so helpful because a
yeah,
lot y'all live in one of these states.
yeah,
One of these 50 United
one of the
States
50
and
states.
outlying country. Yes.
But don't be afraid to seek down payment assistance. Don't see down payment assistance as a and I
I
hate
make
to
too much money, I'm probably not gonna be able to get it.
no, and this and I've heard someone say this on more than one occasion. I've heard people say this on more than one occasion. They talk about down payment assistance as if it is a government handout. And so, because some people preface it that way, there are people who won't seek down payment assistance because they see it as a government handout. And let's
Trying to get
not,
these houses sold.
right? Right. So let's not, don't
Don't
let,
demonize it.
yeah, don't demonize and don't let pride keep you from seeking the assistance because it's there for a reason.
Yeah. If anything that can help you save some money out of your own pocket, take advantage of it. Just take advantage
Especially,
of it.
yeah, especially in this economic climate that we're in. So,
We're not gonna talk about it because it's depressing.
but it's brighter day
It is. Every day is a light day.
because guess what? This is what I know about God. He gonna always make a way.
Always. That's how I'm in this house right
That's what
now.
I know. God still reigns. That's what I know.
Always. That's how I got in this
So,
house. But
so
yes,
all the
thank
stuff
you.
that's going on, mm,
Different
don't
podcast.
be dismayed. Don't be dismayed.
Thank you
Don't
so
let
much
it.
for that information. We're gonna switch on over just a little bit.
Okay, let's tell us about some good insurance. What are we talking about? What are
We
we?
are talking about something called a rider, RIDER. Now, I have to try and say that as clearly as possible because apparently I have an accent and it's a low country and it might come out rider and they'll be like, "What are you talking about?" Oh, well,
Writer,
life insurance rider, not writer, rider, RIDER.
right.
You can also think of it as an add-on. I'm trying to say everything as clearly as possible because my husband still looks at me sideways sometimes.
So it's basically a passenger.
A pass, that's a great way to think of it. It rides on alongside of your insurance policy.
So the
It's
insurance
there.
policy is the driver.
Mm-hmm. And the
The
rider is in
rider,
that passenger seat.
got it. Make it
Probably
plain. Make it plain.
controlling the music too. Help I'm gonna tell, but here's the thing: it's the DJ, but it's that good DJ that is actually beneficial. They helping you. They setting the vibe. Because
Say, don't get in my car touching stuff. Because why are
no,
you
no, no.
touching?
This is the good. This is the good passenger that is controlling the music and adding adding great energy and vibes. They point out all the good places to go to during your road trip. It's adding value to your trip. A rider adds extra value to your life insurance policy. And there are a bunch of different ones. There are so many ones. We don't have time to go through every single one of them. So I'm going to go through some of the most common ones, right? Now, most people have heard something called an ADB. If you are getting your life insurance, yeah, ADB. It stands for an accelerated death benefit rider.
Like that
Emphasis,
fast? What?
not if you die fast.
That's what it sounds like.
We go, let's look into some of the meaning of these words. Accelerated death benefit. So the death benefit will be accelerated to you.
Okay.
Why? What is going to cause that to happen? A couple different things. There are a couple different ones. So there is one called like a terminal illness, chronic illness, critical illness. Those are some of your main ones. And then there's another one called LTC. I'll get into in a second. But the terminal, chronic, or critical illness, those are hard to remember and say back to back. Those riders are, if any of those three things happen to you, a portion of your death benefit will be accelerated to you while you are still living to help you cover some of those costs. So if you have a terminal illness, and there are differences between all of them. A terminal illness, that one's probably the most unfortunate. There is a chance you're
There's
not.
no cure. There's no
If
cure
there's
for
no
this thing
cure,
I
you're
have.
not gonna make it up out of here. Yeah,
Well, I
that one.
mean, you are going to make it up out of here, but
Well,
I'm
yeah,
not about that situation.
unfortunately, you unfortunately gonna go to glory.
So like a terminal cancer,
Yeah,
there a cancer there's no cure for. Okay, gotcha.
something along those lines. That's terminal.
Okay, like
Chronic illness.
okay.
I'm sorry.
No, go ahead.
Okay, chronic illness. A chronic illness. A chronic illness is something that is constant. It is something that you will forever deal with.
Okay,
Some kind of chronic illness or pain that you will deal with for the rest of your life. So there are a lot of diseases that people um develop that they will just have to. I'm sorry.
so like MS.
Yes, and that is one of them. There's a couple of different other ones, but there are a lot of different illness and diseases that people can develop, and in the case of those, you will receive an accelerated portion of your death benefit. The last one is a critical illness. Critical illness means you are in a position where it is pretty much life or death, or you are in a serious condition where it's detrimental to your life. There's a chance you can make it up out of here, or you have some kind of illness or disease or physical, what's the word I'm looking for? Physical ailments, impairment. That's the word, impairment. Um, and you're in critical condition, and you will also get an accelerated benefit for that. Now, the amount that you get is going to depend on the policy. Uh, I currently have a life insurance policy that has those options, and for each one of those, it's $150,000. Great amount. And it also, depending on the company and the policy, also depends on how you get that money, whether it comes to you in payment, like monthly payments, or it comes in like a reimbursement type situation. Depends. The other accelerated death benefit that I mentioned is LTC, which stands for long term care. So these are in cases where you're going to need some form of long term care that's about 2+ years or 24 months. But you had to have been in that situation, whatever that necessitates long term care, for a minimum of about 6 months. And there's a couple different things that can determine whether or not you need long-term care. And it's basically if you are unable to do one of the six necessary things. So being able to feed yourself, bathe yourself, go to the bathroom, dress yourself, those kind of things. Um, if you have to be in the hospital for an extended period of time, it also covers hospice care. It also covers respite care, which is if you have a family member or someone coming to take care of you in your home. It also sometimes covers home care where they send out people to come and take care of you. Um, So it covers any kind of long-term care needs, whatever that is. This is very, very popular among our elder generation, our senior citizens. A lot of them, um, it sometimes covers your nursing homes, rehabilitation homes, something like that. It's very common. It's very commonly used in those cases. Now, you can get, because I know someone might think about it, you can get it separately, long-term care insurance, which is completely independent of your life insurance. It pretty much serves the same purpose, but it'll probably be for more money and have other stipulations and a little bit more wiggle room and all that stuff. But in most cases, it's a use it or lose it situation. In most cases, I have seen one with a company that will allow it to turn into a life insurance policy at a certain point. I have that, but that's the only time I've seen it.
So wait a minute. So it sounds like it's better to get it the long term care as a rider as opposed to a standalone. Okay.
Yes,
It's cheaper.
cheaper. Yeah.
Okay.
Because like I said, in most cases it's a use it or lose it.
Is there
So
so
those
as a I'm sorry. So as a rider, is it use it or lose it as well?
no
Oh, but as a standalone policy, it is.
standalone. Yeah, if you because
Mhm.
here's if you remember us talking about term life policies, right?
Okay.
Term life policy, you're going to pay all that money, and then if you don't die in that time, the
It's
money's
just
gone. It is
right.
what it is.
Right.
Long-term care operates in a similar fashion. If you don't end up using it, then
Mm.
that's just money that's gone.
Okay.
But that's one of those things. One of those are your accelerated death benefit. Basically means if something happens to you, a portion of your death benefit will be advanced to you. That's accelerated death benefit. Now you have something called a waiver of premium rider. That means if you um suffer some sort of disability, whatever that is, and that's going to depend on your insurance company, they'll waive your premiums. You won't have to pay them, which can alleviate a lot of stress because if you're already sick or you are impaired in some way and you also still have to consider thinking about paying for your life insurance because in some cases you're really still going to need it, there is an option for you to it'll waive your premiums for the time, the duration of your ailment, whatever that is. So it's a good option. It's a good thing to have. Another good one is a guaranteed insurability rider. Another good one is a guaranteed insurability rider. And I don't know if you can you still see me and hear me?
Yeah.
Am I still seeing? Okay, I was frozen for a second. But guaranteed insurability rider. That one is exactly what it says. It guarantees your insurability if in the instance that you want to get more coverage without having to go through another medical exam. Because obviously, with your life insurance, if you need, when you go to get your initial life insurance policy, in most cases, you'll have to have a medical exam. They'll have to go through your hospital records or your medical records to ensure if you are insurable. And in some cases, unfortunately, there are people who are not. But with this rider, say for instance, later on down the line, you want to get more insurance or raise your coverage or whatever it is, the guaranteed insurability rider says, with this, you do not have to prove insurability. You'll be insured. You will have insurability with this rider,
Is there a
which is
limit to how much you can get?
that would depend on the insurance. In most cases, yes, but again, it's dependent on the insurance company, that policy, or the insurance company and their policies. A lot of those things vary. It's a lot of things that vary from insurance company to insurance company. They kind of have the basics. They kind of have all the general same rules, but these companies do what they want to do. Um, but that's also why I preach getting insured as early as possible when you are at your healthiest and getting your children insured because specifically your children, because when your children are insured, they have They get whole life insurance policies regardless, but they automatically get guaranteed insurability riders at no additional cost. I should have mentioned that riders do cost a little bit extra to your premium. It does add a little bit of cost. Unless it automatically comes with it. Like with my life insurance policy, the terminal, critical, and chronic, it automatically comes with mine. If I wanted to get more, obviously would add a little bit more. But with children, they automatically get the guaranteed insurability rider.
So you,
That's why I always it's great to have, because you never know what could happen.
right.
You can be perfectly healthy one day and the very next day uninsurable.
Witness.
Yeah, and it's very, very upsetting. Um the last one I want to talk about is the child rider. Now, this one, I remember when I was first learning about all these things way back when, and listening to you talk about it because you have this. Um, I was like, what do you mean? That don't make sense to me. Like, that doesn't make sense. Um, it's to a and it's in layman terms, it's insurance policy inside of insurance policy. But it should not be your only. It should not be the guaranteed because it does come up to a fault. So basically, if your child passes during the duration of your term or your policy, or while you're still living, if you have a permanent life policy, then there will be a death benefit for that child. But the reason why I say that it should not be considered, or it should not be in lieu of getting them their own policy is because it really only covers funeral costs and medical bills, that kind of thing. It's essentially like a final expense policy. If y'all remember me talking about that, where it's only a certain amount of money um, that covers just those final expenses. That's how all a child life rider pretty much covers. But it's great to have. It's a good thing to have because, like I said, again, you never really know, and that's the business I'm in of. You never really know what could happen. So those are your basic ones, and I was thinking about which ones to talk about, and I remembered there is one when we talk about term life and we say, "Oh, we'll never get that money back." That is 99% true because there's the 1%, which is there is something called a return of premium. A return of premium on term life insurance. Now, there is basically what this is if you outlive your term life policy, you will get back your paid premiums, the base pay of premiums. So let's say, for instance, if it was you paid $24,000 in premiums and you outlived your policy, you will get that $24,000 back. Now, now,
I'm intrigued.
great, because there are a lot of stipulations because clearly that comes at a little bit of a loss to the insurance company, so they have to protect themselves. So there are a lot of stipulations, and that's dependent on the insurance company to even qualify for that rider. Um, and do not misunderstand, it's not all of the premiums you've paid. You don't get all of that back. You just get the base premium. So, say for instance, your premium without anything else was $50 a month, right? However, you had another rider on there. So, you had a child rider on there. So, you had to pay extra because of substandard rates. Like if you have a dangerous lifestyle, like you go bungee jumping every few months, or you like to go ski, or
And
yeah, if you have if you had to pay extra for those, um, you or whatever the case is, if you had to pay extra outside of the base $50, it's not going to cover that. You
okay,
won't get that back. You'll
okay,
only get the base pay, the base premium, or the basic cost of insurance.
okay. That's
So
the only stipulation.
say that again.
Was that the only stipulation that I won't? I just won't get the the rider money back. I'll get the premium money back.
It's yeah, and the I also want to note that it's only if you outlive your term.
Okay.
Because say for instance, you had a 30-year term and you pass away at 25 years, your beneficiaries are not going to get that premium back. They're only going to get the death benefit. Because that's also a question.
So if I get the policy at 30, and I get a 30-year policy, I'm 61. Run me my money.
Pretty much.
Oh, say less. Okay. And you said is do all insurance companies offer that though?
No.
So does your health have to be do you have to be in perfect health to get that?
I wouldn't necessarily say perfect health, but again, this is going to depend on the insurance company and their underwriting laws or underwriting policies,
Guidelines. Okay.
guidelines. I don't know why I can't talk today. Their underwriting guidelines.
Okay.
They have their own preferences of what level of health you should be for that, but in most cases, it's safe to assume to be at your healthiest for this rider because, like I said, not everybody's going to be able to qualify for it because it is a huge financial risk for the insurance company. Because if you remember, um, on average, only 2% of term life policies pay out. So only 2%, roughly 2%. Most people are outliving their term life policies. So if an insurance company is allowing a return of premium on your life insurance policy, they are at a risk. That's something that they would have to consider. So they do have these add-on costs or whatever to kind of compensate that loss for
Added
later on
cost.
down the line. Yeah. So I'm not saying no one can get it. There is a chance to get it. Whatever insurance company that you're looking for, see if they offer that. You can ask your insurance broker. You can call the insurance company directly to see if they offer it, and make sure you read the guidelines and the qualifications for it, and what if there's anything that you need to maintain during the duration of your policy. Because, like I said, you might have to pay extra because of your lifestyle. Because that's also something they consider, not just your health, but your lifestyle. Yeah, just like with any insurance, but it's like a bit more strict with that return of premium. You any more questions for me?
That was good. Really interested in the return premium. Think about that.
Yeah, y'all should consider if you get a term life policy, see if the insurance company offers it and see if you qualify. Because you ain't got nothing to lose. You
Yeah.
might as well try and see.
Oh, I do have a question. It's not about any of the writers that you mentioned. I have a question about so if I have let's say I have a term policy for, um, let's say 200,000. I have a $200,000 term policy,
Mhm.
but I want to reduce it to $100,000. Can I do that with a term policy?
So the way that you would have to talk to whoever the insurance company that you have
Yep.
specifically, if you can, because from what I've seen, you would have to either cancel your old one and get a new one.
Okay.
That's one of the things with term life policies. It's not flexible. It's pretty much set in stone that this is what it's going to be.
So we need to talk about that. We need to go more in depth in that next time. So
Into the complexities of
yeah,
term life versus
the difference
permanent.
between term and life, and how, like you just said, the flexibility of it all. Because I think that's, and then even with the return of premium rider that you mentioned, like that, yeah, we need a deep dive on that.
Yeah, that's the most flexible policies you'll get out there are going to be the permanent life ones because there's more there's more options.
So
Your term
term,
life policies, that's like it's a guaranteed win for the life insurance company, so they're not going to do anything to help you pretty much. It's a guarantee, like it's an almost guarantee, a
a
98%
guaranteed check.
chance
Yeah,
that they're
that they're
not going to
not
have
gonna,
to pay out.
yeah.
So Not as much flexibility and freedom within those because they're trying to secure their money.
The bag, the whole bag, and nothing but the bag. Thank you, Ariana. This has been great.
Of course, thank you. I learned some things. Even going
Yes.
through the process myself, I still learned some things.
Yeah, we have to always be learning because things change. The environment changes, the climate changes, the market changes, the economy changes. So we
The
have
laws
to
change.
the laws change. Yeah, the laws change all the time. There
Yeah.
are side note. Um, one day, uh, I don't know what the day of the week is, but maybe 2 days ago, maybe it was yesterday, I don't know. But I was on a I was on a call talking about the different policies and the different bills that are in the Senate and the Congress that are on the floor concerning housing. I had no idea that there were so many bills in waiting to be read and passed concerning housing and affordability. So we have to be mindful of those things because, as you just said, laws change all the time. So, and we got to
Yeah,
know.
we're not just learning from each other. We're also obviously just like she said, learning within our own fields. We have to.
Yeah, you have to be a learner because things change every day.
Right. I might learn something new tomorrow. You never know.
And you better.
As always. So yes, thank y'all so much for tuning in with us. We had
Thank you.
fun. As always, we will see you guys next week. And if you need anything, we will be here. And we will put that um the link for all the down payment assistance in the description box. So don't forget to go ahead and check those out. But yeah, thank you so much. We'll see y'all next week. Thank y'all so much for tuning in to another episode of the Real Life Podcast. Now, today you learned that there are over 4,000 different down payment assistance programs for you across the country, and that it is available to you regardless of your income. So take advantage of those things. And you also learned today that there are multiple add-ons or riders that you can add onto your life insurance to add some of those living benefits and get a little bit more bang for your buck, you know? Don't forget to go ahead and check that description box for some resources on down payment assistance programs across the country and a little bit more information on the different writers, especially some that I didn't get into today. And of course, you can always connect with us, with my mom for all things real estate at the Shanita Johnson, SHANITA on Instagram, Facebook, and on YouTube. And of course, you can send her an email with the subject, The Real Life, to Shanita@ShanitaJohnson.com. That's SHANITA. And then connect with me for all things life insurance on Instagram, RAJ.John, on TikTok, RA.J.John, on YouTube, Future Planning with Ari, and send me an email with the subject of real life, ArianJJohnson@gmail.com, ARIYAN Johnson@gmail.com. Thank y'all so much, and we will see y'all next week.